Saturday, February 15th, 2020, MONERO 64, home of alternative economics and contrarian views. Today I want to talk about the deflationary storm that is brewing worldwide. And I'm not trying to scare people off. All I'm trying to do is warn people, pretty much like a weatherman who warns people of a coming storm. Yes, it's scary, but at least they're trying to warn you, and that's what I'm trying to do here. So today I'm going to look at some pretty disturbing things that have been happening in the markets, especially in the bond market, and it seems to have kicked off quite a bit this week. So I'll start off with the sinking bond yields worldwide. These are government bond yields, and they're an indication of fear. Investors still look at government bonds as a risk-free place to park their funds. So let's look at what's happened this week. You can see there these charts here, sinking bond yields worldwide. You've got the United States, Germany, United Kingdom, Japan, Switzerland, France, Netherlands, and Australia. You can see that a year ago, yields were a lot higher. You can see that most of the countries in this illustration, yields are negative throughout the yield curve. The yield curve, of course, is below there, the yields below the charts. In the US, it's still positive, but it's been dropping very, very quickly. We were above 3% in the 10-year yield back in 2018, and now we're almost back to the 2016 low of 134. We're at 158. Even Italy, a country that's known for high interest rates and high inflation, their yields are negative up to the 3-year yield. So now I want to show you the price of gold in different currencies, the gold storm. Why the storm? Well, because I think the price of gold, what it's doing is another symptom of this deflationary storm that is coming. It will lead, unfortunately, to a Great Depression, or even greater than in the 1930s. And why do I say that? Well, because we've binged on so much debt for so many years, for about 40 years now, that there comes a time when the creditors have to be paid. And this is what happens in a deflationary collapse. A lot of investments are liquidated. A lot of companies go bankrupt. And gold is a safe haven, even in times of deflation. And that's another thing that I wanted to point out. A lot of people say that gold will go down during deflation. And I'll try to show you that I don't think it will. So let's look at this gold storm chart. So as you can see, gold is reaching all-time highs in almost every currency here. In pounds, the first currency, XAU GBP, it reached an all-time high last year. And that was at a time when a lot of people thought that Boris Johnson was going to take the UK out of the EU without a deal. So the pound really dropped sharply and gold went up to almost 1,300. Then things got sorted out, and they're still working on a deal, and that's why gold dropped there, but it's picking up, as you can see. And then you've got a gold price in euros, XAU EUR. That's made a new all-time high this week at around 1460. You've got the gold price in Canadian dollars, XAU CAD, making a new all-time high last week. We've got the Japanese yen, which is an interesting currency I want to look at a little later. That's making new all-time highs. Gold is against the yen. You've got the New Zealand dollar as well. Gold making new highs against that. The Aussie dollar, I made a video recently about that. Continue to go higher, the gold price. And then you've got some currencies that are still fairly steady, but also very much near their all-time highs, the Swiss franc and the Chinese yuan. This is another sign, in my opinion, even though most people think that gold only does well in an inflationary scenario. And I can tell you that's not the case. And that's why I guess I'm the home of contrarian views, because I look at these things. Before I look at gold in a deflationary depression environment, before I go look at how gold performs in a deflationary depression, I want to show you these two charts here. It says still some time to prepare. What does that mean? Well, this is the price of gold in US dollars. So those people who have US dollar balances, those people who live in the US, who earn in dollars, who are able to save, you still have time because gold is still far away from the all-time highs. So you've got time to prepare there. We closed at 1584, I think, yesterday. The chart below is a shorter term chart, shows you how we're breaking out this pennant. Of course, you've seen in the past, sometimes we see breakouts of pennants or wedges, and then the market comes back down. So that's still possible, but I still think this is a bullish consolidation. So that's more short term. So yeah, you still have time to prepare, in my opinion, if you hold a lot of Federal Reserve note balances or dollar credit, if we want to call it that. So to finish off here, yes, a lot of people ask me, oh, so-and-so said that during a deflation, gold will collapse. Harry Dent comes to mind a lot in this case. But I've looked at gold in a deflationary depression. And many of you know about Japan, their lost decades. Well, since 1989, early 1990s, the Japanese stock market bubble and real estate bubble popped in, and the Japanese economy hasn't been the same for 30 years. So Japan is the poster child of negative interest rates, negative yields. The JGB yields have been negative for years. The Bank of Japan has been printing money and keeping rates at negative levels for years. And look at the gold price. This is courtesy of goldprice.com. 20-year gold price history in Japanese yen per ounce. So Japanese yen making new all-time highs here, or it might be matching actually the 1980 high. I'm not too sure, but this is just to show you how since 2001, and unfortunately I haven't got a chart going back to 1990, but since 2001, gold has gone from 30,000 yen to 175,000 almost now. And then a very interesting chart on the right hand side, Homestake Mining. I think it was the biggest gold mining company during the 1920s and 1930s. And this chart compares it to the Dow from 1921 to 1940. And there's some comments here in this chart. So you can see there, March 5th, 1933, President Roosevelt confiscates gold. So Americans can't own monetary gold anymore. So the price of that Homestake Mining stock shoots up. And then you have official gold price raised from $20.67 an ounce to $35. And the price shoots up even more. And you can see what the Dow does versus Homestake Mining. So that's another proof there that gold does well in a deflationary depression. So you've got time to prepare for this coming deflationary depression. So does that mean that prices are going to drop? Prices of consumer goods, prices of necessities? Probably not. So it's going to be deflationary for the monetary system for the debt, there's going to be, in my opinion, a lot of failures, bankruptcies, and that's why precious metals are going to keep doing well. The economy is going to slow down, of course. I think we are already seeing that. We have seen that since 2008. It's been quite an artificial, I would say, recovery. There's been a lot of government spending. The jobs that have been created haven't really been well-paying jobs. Many people have had to take more than one job to cope. And the other thing that's going to hurt even more is that the Keynesians, of course, who are in charge, are going to keep piling on the debt, and it's going to make it even worse because debt is a burden to productive endeavors. The debt's going to flow a lot to the government. It's going to crowd out the private sector. So it's going to be a deflationary spiral, unfortunately. That's my opinion. Am I advising anyone to get precious metals, gold and silver? No, but it's something that I'm doing and I've been doing for almost 20 years because I know what's coming. Even if we do flip to a hyperinflation, which is very easy, the precious metals will protect you. But what we don't have right now, which would be negative for precious metals, is stable prices, stable interest rates, stable growth. We don't have that. Don't buy into the we've got the greatest economy ever mantra. I think that's very misleading. So there you go. I really think we are in the beginning of a big deflationary storm. As you saw from my charts, it looks like the forecast doesn't look very good. Bond yields are pointing at that. The price of gold's pointing at that. So if you can, try to get some shelter from the storm. I think the Dow, right now, my analogy is that the Dow is the ballroom in the Titanic. The powers that be are trying to keep the people on the ship. So they've got a great party going on in the ballroom, and that's the Dow and the stock market at all-time highs. If you enjoyed this video, make sure you hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. You can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great weekend. Take care. Bye.